What's up, everybody? Today we're going to be talking about no down payment options on a first-time home buyer loan for you guys that I know are probably first-time home buyers watching this video. Basically, this is going to be something that's not going to be a VA loan, so you don't have to be military. It's not going to be a RSDA loan, so you don't have to worry about being in a rural area. And we're going to get into that in just a second, but first I wanted to let you guys know that if you guys have any issues with your credit right now, or you have questions about your credit, I'm right now giving away one of my best-selling ebooks that is called The Top Credit Questions Answered. So basically, all of the top credit questions that I've been asked over the years have been put into this ebook, and I have answered all of those questions for you. Everything from how do you start working on your credit yourself, what do you need to do if you're about to be sued, or what do you need to do if you're about to co-sign, how does that affect you? All types of different questions that you may have already thought of are in there. So just make sure that you go and check out that ebook so that you can get that information for free while it is still free, and be able to get the answers to your questions, and it can possibly help you along your credit journey. But right now, like I said, we're going to be getting into this information about the mortgage loan. But if you don't know me, I'm Will Frazier, your credit expert and business expert. I'm here to help you with your personal credit, your business needs as well. And today we're talking about mortgage loans because I'm also here to help you with your funding options when you're trying to get home as well. So this is going to be one of the options that you have available to you. And make sure that you pay attention to everything I'm going to mention, because everything that I'm going to talk about is going to be vital to you getting approved for this mortgage loan for your home. So first thing you need to know is that this is with Navy Federal. If you've seen on the channel, I have other videos where I went over some of the credit cards that they offer, and I give you some tips on what you can do to become a member of Navy Federal. You don't have to be a member of the military to be a part of Navy Federal Credit Union. So that means the door is open to a lot of you. You just need to know what you need to do in order to get in the door. And once you are in the door, they have some great options for mortgages, which we're about to go over now. One of them is an option that most people don't know about because a lot of people don't have Navy Federal. So, of course, you wouldn't be aware of it if you aren't looking at their products because you're not a member with them. But you can see here, these are their mortgage products right here. You can see the VA loan, 0% down payment, and these are the APRs that they have, very low on the VA loan. 0 down payment on the military choice. The APR is as low as 4.1, and the interest rate is as low as 3.8. So that's higher than, of course, the VA loan, which of course they're gonna give good options to the VA loan, but also the conventional is really good as well. The problem with it though, you still have that down payment. Now, this is the option that I want to talk to you guys about, the home buyer's choice option. So we're gonna go ahead and we're gonna look at some more details about this. It is on the higher spectrum of their interest rates as far as rates go, but you have 0% down payment, which is what we're here for right now. Because I know some of you guys may not have the money for a down payment on hand, but you are looking in the market for a home, or you really need to get a home. So this is going to be a good option for you, like I said, if you have Navy Federal. So as you can see here, no down payment required. We want you to realize your dream of home ownership now without years of waiting to save for a down payment. Our home buyer's choice loans offer 100% on purchases, making them a great choice for first-time home buyers. Now, these are the features of the loan, which are going to be important. Fixed and consistent payments. They have fixed interest rates, which is of course what you want to have on a mortgage loan. You don't want something that's going to be changing constantly. You want something that you're locked into that's not going to increase your payment, severely later on down the road. No private mortgage insurance required. This is another great benefit of this loan. As you can see, most lenders require the borrower to purchase PMI, private mortgage insurance, unless they can make a down payment of 20%. This loan doesn't require PMI, which saves you money each month. So yes, on most conventional loans especially, you're going to have paid down 20% of the home value, on the value of the home that you're purchasing, in order to not have to have PMI. On some loan types, you have something like a PMI anyway for the entire duration of the loan. But with conventional, you can at least get rid of it after you've paid down 20%. With this loan type, you don't have to worry about PMI at all, which means you get to save money every month by not having this extra payment included in your monthly payment. Now, seller contribution, seller can contribute up to 6%, and that's like money that will go towards your closing costs and prepaids and other costs that sometimes home buyers overlook. And I'm kind of familiar with this stuff because I was a realtor for about 2 to 3 years until COVID happened. But as you can see, some good benefits here. The major one being no down payment required. But that PMI, not having any of that and not having to pay a large down payment in order to acquire, not having a PMI is also very great. It's good that they allow 6%, seller contribution as well. So this is all, some really good stuff. And here they just mentioned the rates again. But what I wanted to talk about, since we've already went through the meat and potatoes of the loan, is what you need to do in order to try to qualify for this. So of course, when it comes to getting a mortgage, they're going to have things like a score requirement. It's going to be a minimal score requirement, and it's going to be your middle score requirement, which we're going to talk about. And also, they're going to look at things like your debt to income ratio. They're going to look at things like, what is your income. They're going to look at your credit report, not just your credit scores. They're going to look at your credit report, and certain items on your credit report can get you denied for the loan, regardless of what your score is. And it can also cause extra things that you may not want to happen going through the process. So just to give you some insight on what those things might be, first off, we'll talk about the score. So for the score requirement, it's going to be about a 660 middle score. Now this may change depending on whenever you're seeing this video, but 660 middle score is usually going to be what the requirement is going to be for the credit score when trying to get approved for the mortgage. Now, when I say middle score, that means they're going to pull all 3 credit bureaus. So if you're looking at Credit Karma, that's not going to really be giving you the information that you need, really, because they only show you 2 bureaus and they don't show you FICO scores. They're only showing you a Vantage score, which can come in higher than a FICO score. So you may think you're at that 660 already, go to the lender, apply, get denied, have an inquiry on your credit report, and not have a mortgage. So that's not the tool that you want to use when you're trying to see if you're ready, to get a home loan like this or any home loan. You want to pull all 3 of your credit reports and scores, FICO scores, from either a website that you may have to pay for it for, and yes, you may have to pay a few dollars for it, but that's still better than getting wrong or inaccurate free information that's not going to help you. I do have a source down in the description that you can use to get your credit report, so check that out if you need something like that. But definitely go ahead and try to see what your FICO scores are and look at all 3 of your credit reports. You're going to need to do that anyway, because like I said, there are some things that can be on your credit report that can also cause you, to get denied. Some of those things being having recent late payments, and when it comes to your credit, recent is considered anything in the last 24 months, so the last 2 years, not just the last 6 months or the last few months. So not only does late payments affect your credit score greatly, especially the more recent they are, they also can cause you to have to do things like show that you have a reserve in your bank account. What is a reserve? Basically, if you say let's say the mortgage lender says that you're approved for $1,500 mortgage every month, that's how much you can afford based on your debt to income ratio. Well, what they're going to do is they're going to say that because you have these recent late payments, we're not 100% sure that you're going to pay this mortgage on time. So we need to see that you have at least 2 to 3 months of this mortgage amount saved up in a bank account. And when they see that, that's going to, help them have what they need to see to feel confident in giving you a loan based on your late payments. That's not based on anything else. That's just based off you having late payments. But like I said, late payments can be drastically lowering your credit score as well. So that's, of course, something that you want to deal with for all of those reasons, because if you had to have 2 to 3 months of that $1,500 mortgage saved up in your account, then that could be, easily the $3,000 $4,500 that you have to come up with just to show them that, just to make them feel more confident, whereas you wouldn't have to do that if you didn't have the late payments showing up on your credit report. So that and other derogatory marks like charge-offs and collections can also cause you to not get approved for this mortgage. So all of these are things that you want to be checking out on your credit report just to make sure that you're in good standing, to make sure that you're going to be able to get approved for this mortgage. Now, other than how they look at these accounts, these same type of accounts can affect your score. So they could be lowering your score, keeping your score from being at that 660 that you need it to be at. And also, in addition to that, certain ones like charge-offs and collections may not get counted in your debt to income ratio. Well, to be more specific, charge-offs may not get counted in your debt to income ratio, but a collection account might get included in your debt to income ratio. If your debt to income ratio is too high, that alone can also get you denied for the mortgage. So this is something that you also need to make sure that you have an idea of what you're dealing with. And your debt to income ratio is going to be determined by the debt payments that show up on your credit report, not the balances on your debts like your credit cards and your loans. It's going to be the payments that show up, your monthly payments, and they're going to total those up, and they're going to compare that to your monthly income and come up with a percentage, which is your debt to income ratio. And if the number isn't the number that they want it to be, that can get you denied. Or if it is within the range of what they want it to be, but it's still on the high end, that can lower how much money they approve you for. So if you wanted to get a house that may be something like a $200,000-$300,000 house, and that's what you like, that's the price range that you like as far as houses and what you are seeing, and you need to have a certain debt to income ratio to have that, well, your debt to income ratio can be causing you to not get approved for that much, and it could be because of collections being added into your debt to income ratio, or other things as well. So you want to be looking at your credit reports before you walk in there, so you can look at all this stuff, make sure that you got everything in place, and then go and apply, and then worry about the inquiry at that point in time. But you'll already know that you're more prepared walking in there, having done this research ahead of time. And of course, if you need some help working on those issues so that you can get approved for a mortgage, you can always do a credit consultation with me. I'll be glad to take a look at your credit information, see what it is that can be improved there, and even see how we could possibly help you. Now, I hope this information was useful. If it was useful, make sure you like this video and subscribe to the channel so you can get more useful information like this. And definitely share this information with anybody that you know may need it. I thank you guys for sticking around to the end of the video, and I'll see you next time.